You go to the grocery store. You grab the same things you always grab. Nothing fancy. Just the basics. And somehow, you're spending $30, $40, maybe $50 more than you used to. Your rent went up. Gas is higher. Even eating out costs more than it did 2 years ago. And your paycheck? It looks exactly the same. You're not imagining it. You're not spending more. Something else is happening, and it has a name. It's called inflation. And in this video, I'm going to break down exactly what it is, why it's happening right now in America, and, most importantly, what you can actually do about it. No economics degree required. So, let's get into it. Inflation is when prices go up over time. That's it. When the same dollar buys you less than it did before, that is inflation at work. Think of it this way. In 2020, you could fill up your grocery cart for $300 a month. Today, that same cart, same items, same brands, costs you closer to $358. That's almost $700 more a year. Just on groceries. Just because of inflation. Now, a little bit of inflation is actually normal. Economists expect prices to rise about 2% a year. That's considered healthy. The problem is when inflation runs too hot, and right now in America, it is running extra hot. As of May 2026, the inflation rate in the US is 4.2%. That means prices today are 4.2% higher than they were just 1 year ago. And that number has been climbing. It was 3.8% in April and 3% at the start of the year. Translation: your money is losing value faster than your savings are growing. And for most people, that feels like a slow leak in your wallet that you can't plug. So why is this happening? There isn't just one reason. Inflation is usually a combination of things. Let me walk you through the big ones right now. Number 1. Energy prices. Gasoline prices have soared over 40% in the past year. That's enormous. And when gas gets expensive, everything gets expensive, because almost everything you buy was transported by a truck, a plane, or a ship that runs on fuel. The cost of shipping gets passed down to you, the consumer. Number 2. Tariffs. The US government has put tariffs, essentially taxes, on a huge range of imported goods. When it costs more to bring things into the country, companies raise their prices to cover the difference. You end up paying for that at the register. Number 3. Shelter costs. Rent is up. Housing costs make up about 36% of how inflation is measured. And for renters especially, this one hits the hardest, because your rent resets, sometimes every single year. Number 4. Food prices. Fresh vegetables are up over 11% compared to last year. Tomatoes specifically, up nearly 40%. Beef and fish prices have also jumped. The food supply chain is still recovering from years of disruption, and those costs are landing on your plate. All of these things happening at once is why inflation feels so painful right now. It's not one thing. It's everything at the same time. Like a toppling domino track. Next question is how it actually affects you. Now here's what most financial videos miss. Inflation doesn't affect everyone the same way. It depends on how you live. If you rent your home, inflation hits you harder than someone who owns. Your landlord can raise your rent. A homeowner's mortgage payment stays the same. If you drive a lot, you're feeling the energy prices more than someone who works from home or takes public transport. If you have a family, you're spending more on food, childcare, and school supplies, all of which have gone up faster than average. If you're older, healthcare costs are your pain point. Medical inflation has historically run higher than the headline number. And this is the one that sneaks up on people, your savings. If your money is sitting in a regular checking or savings account earning close to nothing, let's say 0.01% interest, and inflation is running at 4.2%, you are losing money every single day. Not because you're spending it, just because the value is shrinking while it sits there. That's the silent damage of inflation. It doesn't take money from your account. It just makes the money you have worth less. What you can actually do about this. This is the part that actually matters. Step 1. Don't keep too much cash sitting idle. Your emergency fund should be in a high-yield savings account, not a regular bank account. Watch previous video to know how to invest in a high-yield savings account. Right now, some high-yield accounts are offering 4 to 5% interest. That at least gives your savings a fighting chance against inflation. Step 2. Look at where you're spending and find the leaks. Inflation is a good time to audit your subscriptions, your eating out habits, your impulse buys. Not to punish yourself, but because every dollar you're not wasting is a dollar fighting for you. Step 3. Invest, even small amounts. Historically, the stock market has returned about 7 to 10% a year on average. That beats inflation. If you're not investing anything, inflation wins by default. You don't need to start big. You just need to start. Step 4. Don't panic sell your investments. When inflation rises, people get scared and pull money out of the market. That's usually the wrong move. Long-term investing is still your best defense against inflation eating away at your wealth. Step 5. Think about your income. Inflation means your current salary buys less. This might be the year to ask for a raise, pick up a skill, or explore a side income. Your income rising faster than inflation is the actual win. Inflation isn't going to disappear tomorrow. But understanding it, really understanding it, puts you ahead of most people who are just watching prices go up and feeling helpless. You now know what's driving it, how it's hitting your specific situation, and what moves you can make starting today. So start now. If this video helped you, hit subscribe. We break down money topics like this every week in plain English, no jargon, no fluff, just simple explanation to give you a head start. Drop a comment below. What's the one price increase that's hit you the hardest this year? I'd love to know. Tell me yours and I'll tell you mine too. See you in the next video.